The outbreak of World War III seems imminent. Dow Jones is approaching bear market levels. Small caps have already entered bear market. Market breadth is deeply oversold, and as a result bounce is likely, but we do not know from what level. And as far as good news, junk that is attempting to bottom. We'll also look at oil and absolutely horrendous oil shock if Strait of Hormuz is closed. And gold is pushing to records while Bitcoin is breaking out and has hit new 52-week highs. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, October 27, 2023. Please hit the like button, subscribe to the channel, share this video. These actions are what keeps this channel going. Once again, thank you. If you are not a subscriber, if you are a subscriber, stay tuned for the members-only recap. We will cover many various securities. For example, euro and natural gas will be covered in the members-only recap. Also, stay tuned for many various stocks, such as large cap stocks, ETFs, as well as speculative stocks. As always, throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, for which you can find out more by following the link in the description. On this chart, you can see them as this blue, red, and yellow lines. All right, let's get started. So today I'd like to start, I usually start with S&P 500, but today I'd like to start with Dow Jones. This is DIA. This is Dow Jones Industrial Average ETF. So on this chart, as you can see, the lines, the green, blue, red, and yellow line. And notice right now that Dow Jones has already dropped below this red line. So when we trade in stocks, when I trade stocks, when I look at using my indicators, these are my indicators, we look at this red line as a caution, basically. So if we drop below the red line, we're saying that we're very close to entering a bear market, and bear market is at the yellow line. So notice how close we are to a bear market. And when I say bear market, I imply a downtrend in security. So once we hit a bear market, we will look for opportunities to sell short. But we haven't gotten there yet, and what I usually do is I look for to S&P 500 to give the ultimate signal. Dow Jones is a little more volatile because it is composed of only 30 stocks. So nevertheless, these are very important stocks that are composed within the Dow Jones Industrial Average, and notice that we are indeed below the red line, and meaning that this is caution, and we are very close to a bear market levels. Small caps, this is IWM, small caps Russell 2000 ETF, is actually already technically in a bear market. So notice when we closed out, we closed below the yellow line here on Friday the 13th, October 23rd, and again on Thursday the 19th of October. And then we actually continued lower. Today we closed at new lows. So these are, I believe, 52-week lows. Yes, they are indeed 52-week lows. Now we are retesting these lows from September of 2022, and we can see that we're there. So if that level gives, it's not a good sign usually when that happens. I'm going to look on the weekly chart for that. So notice that we can put a line below the lows. So there's the low from June 2022, and we are very close to that low. So this is small cap stocks. Okay, so it's a 2,000 of the small cap stocks. It's not, S&P 500 still is more important, I think, but just to estimate what we could potentially expect should indeed the fears, my fears would come to pass. Notice this pattern. It's kind of like M, like Mary, or I don't know, upside down W with an extra W with an extra V. So I'm gonna draw it out. So this is the pattern I'm referring to. Sort of like that. And notice the depth of this pattern is pretty clearly defined as about 20% or so, or $38, 38 points. We can estimate when or if we break below that level, we can say that we're going to continue lower another 20 or so percent down. This is like a normal, they call it range flip, or estimate of a move. Will it actually happen? Really depends on what's going to happen within the next few weeks, and we're going to be looking at S&P 500 as our guide. But just to kind of keep it in perspective, this is just like the beginning. If it starts to drop, like if it enters a bear market, this is, we can expect a move of such magnitude. Hasn't yet happened, but it's not looking good, to tell you the truth, because once again we are indeed below my lines. We are indeed now in a downtrend. We are making 52-week. This is a 52-week low right here for small caps. I actually had a position. I thought we were going to go higher. No, we turned around. We continued lower. I was just recently stopped out of my position, unfortunately. And here is S&P 500. So S&P 500 doesn't look as bad as Dow Jones or as small caps. So we're right now looking at S&P 500. So the top was right here in July 27th, and then we were coming down in this wave-like fashion. This week we're pretty much non-stop dropping. We can see, looking at the weekly chart of S&P 500, notice that we dropped. This is a big bearish candle again, so two bearish candles in a row. There was one from last week, and then there is the bearish candle from this week. Also notice that last week I drew in this white line. So this white line just shows there's this gap from August 2022. You kind of see it there, and also the tops right here from January of 2023, and finally a breakout above those levels in May of this year. Now we're breaking below those levels. So if the worst scenario, well, one of the worst scenarios comes to pass, we can expect a duplication of at least this much to the downside. So right now the depth of this movement that started, I'm gonna draw it out again, that started back in May of this year, kind of topped out in July and came back down just now. The depth of this pattern is about 9% or so, 400 points. So we can easily expect a move of that magnitude to the downside, and at that point we'll be retesting the lows from December 2022. Now usually those moves overshoot, and most likely we will actually retest October 2022 lows, provided in a few minutes I will say that we are not yet in a bear market. So we need to not yet think that they're going to collapse, and here's the reason why I think that. So the last signal for S&P 500 was bullish, was an up signal. It occurred right there in April of 2023 when the S&P 500 closed above my blue support resistance line. So as of right this instant, I am still thinking about S&P 500 as being oversold because we're now below the blue support resistance line. However, we have not yet given us this security has not yet given us a bearish signal, a entry into a bear market. Now, entry into a bear market will occur when or if we close below the yellow line. So it is currently not that far but not that close either. So we're currently around 6% away from an outright bear market. However, if we project forward, if we project my indicators forward, notice that in January of next year, that line will have moved up, and it will be only 4% away from today's prices. So we are very close to those bear market levels, and more importantly, bear signals. So a signal to at least get out of all of your positions, or at least losing positions for sure. At that point, certain things could happen. We could see if we close below the yellow line, sometimes we just collapse, and we'll see what's called forced selling, so liquidations. Everybody pretty much rushes for the exits at the same time, price collapses. More likely, we will at least see a sort of like a small bounce. So let me show you what it would look like most likely. So here's what happened back in April 2022. There's the beginning of a bear market right there on April 2022, where I'm hovering. So that's the beginning of a bear market. We see a move down, and then around the same, about a few weeks later in June, we had a move up towards the red line, and basically at that point we would consider selling short. And even better, just a tremendous opportunity to sell short was back in August 2022. Notice this pretty significant rally, and then notice there's the signal on August 26, and actually this was a very successful trade. So this is what we will be expecting when or if we need to close below the yellow line, bear market levels. Currently it is at 3850 per my system. The S&P 500 is right now at 4117. It closed at 4117. So about 6% away from bear market levels is where we stand at this point. Okay, so I wanted to look at one of the measures of market breadth, or how broad is a participation in the rally. So this is a measure of that. This is percent of stocks above 200-day moving average. So for example, here is Apple. I already showed this. So let's say that there is Apple, and we put in a 200-day moving average. This is a 200-day moving average, and currently notice that the Apple is below 200-day moving average. So in this indicator, it would count as it would not count. It would be 0, right? But let's say we have AMGN, right? And this stock is currently above 200-day moving average, so it would count as +1. Okay, you're with me? So this indicator, the percentage of stocks above 200-day moving average, counts how many stocks are above that moving average within the S&P 500. So out of 500 stocks, currently there is only 24.6% of stocks above that level. So it's a very low level. It is very low level absolutely in general, just a absolute level, and also it is a quite low, very almost extremely low level for when we are in a bull market, when we're in an uptrend. So once again, I still consider S&P 500 to be in an uptrend until we close below 3850. Okay, this has not yet happened. So looking at this chart, we're saying that our signal is still valid. Our bullish signal is still valid. However, we're deeply oversold. Okay, look, the percent of stocks above 200-day moving average is currently below the level in June of this year, below the level of March of this year. It's actually below. It's actually at the level of October 2022. And at that point, so I'm going to show you October 2022. There's October 2022. That was the lows, all right, you see. So we are definitely oversold, and like I'm gonna be sounding like a broken record, right? We are oversold, bounce is likely. However, we don't know from what level, and I will always said the same thing. It's likely, but we don't know from what level is going to was going to bounce. Especially now, as as I reiterate, we have right now, I can't believe I'm saying it, but the World War III outbreak seems imminent, and this outbreak is. It was precipitated by attack of Hamas on Israel, and now the retaliation of Israel, and now Americans are getting involved because they're defending their assets in the region, and there are many of those within Iraq, within Syria, within Qatar. There's many, United States assets around that area. So I wanted to show, I'll get to junk debt in just a second, but oil shock and Strait of Hormuz, why is it important? So what is Strait of Hormuz, first of all? So Strait of Hormuz is located right there. It's between Dubai, Oman, United Arab Emirates, and Iran. So Iran is on the northeast side of the Gulf of Persian Gulf. Here it's called Gulf of Oman, and on the southwest, I guess southwest side is Dubai, Qatar, and Oman. So this area, I looked it up. 20 to 30% of world's total oil consumption passes through that area. So you can imagine that that much oil going through a narrow passage like that will, let's just say that we have real honest to goodness hostilities, and United States assets are here, and then Iran decides to blockade this. In fact, it's possible that not only Iran joins them, but it will be a joint effort by the Gulf states, and they will just simply stop exporting oil or just blockade this area. But I think a more likely scenario is for Iran to blockade this passage or mine it with sea mines, and then no tanker can go through. So 20 to 30% of world's oil consumption is an enormous amount. We have sometimes like 2 to 3% of oil consumption being at risk, and prices skyrocket. So, for example, this is when Russia invaded Ukraine. Okay, this is from December to March 2022, prices went up from $70 to $130. They almost doubled. And we're talking about, Russia is not a big exporter. I don't know how much they export, world compared to the rest of the world, but it's not like a lot compared to Persian Gulf. So you can imagine that currently oil, and notice this uptrend, up arrows, this is oil on my chart breaking out above the blue line. So it means that right this instant, literally right this instant, we're getting a buy signal on oil. So if, God forbid, we'll see a breakout of hostilities to a degree that the Strait of Hormuz will be closed, you can imagine what sort of an oil shock could materialize from that. If when Russia invaded Ukraine, we're looking at doubling of price. Can it triple now? Can oil go to like $250? Yeah, that could happen. And imagine what tripling of oil prices, or even doubling of oil prices, what it would do to worldwide shipping. Companies like FedEx, UPS that deliver things like consumer goods. So the shipping will be basically unaffordable. Driving will become basically unaffordable. So we're looking at a deep oil shock to the system of various economies, especially developed economies. So I am really hoping that number one, we are not going to have a war. Number two, we need to very quickly start developing alternative sources of energy and alternative sources of powering our cars and trucks and things of that nature. Because this is what's happening when we have dependence on oil, dependence on one substance that sometimes comes from a very unstable region. Right, let's backtrack just a tiny bit, and I'm looking right now at high yield bonds. High yield bonds, junk debt, is attempting to bottom. Notice where they're attempting to bottom, right at around the blue line. Notice the data is adjusted for dividends. Okay, if I unadjust it, the prices look completely different. So adjusted for dividends, you need to press this button right here. Means the dividends that are paid out by JNK is added back into the price. So this is somewhat promising. Okay, and when junk debt is attempting to bottom, ideally junk debt should just move higher. In a healthy kind of market, stocks and junk debt move together in lockstep. Hopefully, we will bottom out here and rally higher. So, I am looking for a potential bottom, hopefully soon. But once again, we don't know when. And notice that sometimes oversold levels become more oversold. Okay, so we're looking for a bottom, but it may come now or it may come later, and if it comes later it might not actually matter anymore, because what if it bottoms but below the yellow line? So at that point we would have switched into a downtrend. All right, and once again for S&P 500 that's only 6% away. So extreme caution, extreme nervousness really right now. Hopefully cooler heads will prevail, but I don't know if this is going to happen. So I don't know if we're going to have cooler heads, and this region is basically like a, how do you call it, a powder keg, and it could really explode very easily. So let's pray for peace. That's the best thing I can offer at this point. Moving on to the dollar. Here is DXY, dollar currency index on daily charts. Dollar currency index has broken out into a new uptrend. Okay, this is a momentous occasion because we had not have this experience since 2022, November of 2022. Since then, dollar has been in a downtrend, just downward facing arrows. We were selling it short. It did bottom out here in July of this year, 2023, and then went on a tear. Notice that now we have closed above this blue support resistance line. So this means that we are now in an uptrend for the dollar. Okay, so last week I drew in this potential price action, this white line. Okay, so I think we will still continue slightly higher into November, but I think we'll probably pull back into like late November, early December. The reason why I'm saying that is because of the projection of my indicators into the future, and as the way they're projected to act. They're going to be bottoming out in mid-November. Okay, so when dollar next I'm going to look at gold, and this equation, XAU divided by USD, so gold divided by US dollar. If the bottom part of this equation is getting weaker, it will pull this currency pair up. Okay, it will let the currency pair float up. So even though dollar has been getting stronger and stronger and stronger, gold, yes, it came under some pressure. Okay, so here is a July of this year, where dollar has bottomed out here in July and went on a big run. Here's gold, and it did pull back, pretty significantly. But now notice here, this is the Hamas attacking Israel right here, Friday, 6th of October, 7th of October right here on the weekend, over the weekend, 9th of October right here. Gold just went on a straight higher. Okay, so this is showing appetite for fear, I guess. Fear. There's a lot of fear. Okay, because if stocks are dropping, bonds are not really great. Gold is, the only thing that's out there really. So gold has been moving higher, and this is despite relatively strong dollar. Okay, in fact, dollar is now in an uptrend, so dollar strengthening should sink gold, but it is not doing that. All right, and this does indeed happen on occasion. We have sometimes, I'm going to show it to you in a second. I'm going to show you gold versus dollar. There's gold versus dollar. So by and large, there is negative correlation. So if gold goes up, dollar goes down. But on occasion, there's positive correlation. Both gold and dollar are going up. So we're kind of there right now. We're getting to this point of positive correlation where gold is moving higher together with dollar. But what I'm saying is, in the next few weeks, dollar could actually pull back into like late November, early December, and even weaker dollar in this scenario would strengthen gold further. Okay, so let's look at the weekly chart of gold, and here it is. So we are this white line is all-time highs. See, the all-time highs occurred back in August 2020, and we haven't been able to get up to those levels. So we are right now approaching all-time highs for gold. Okay, I already showed this chart on multiple occasions. This is a sort of, you can call it triple top, you can call it cup and handle, maybe double cup with handle, something like that. All right, so when or if we get to the all-time highs, which are around $2,077, so anything about 2,070 or so, if we break out, if we close above those levels, it's very possible that we will duplicate the depth of this pattern on the upside. Okay, so depth of this pattern is around 440 points. Depth of the pattern started like from September 2022 until recent highs. So we're looking at gold at 2,500 to start. All right, that's just this depth of this pattern. Will this actually happen? What do you guys think? This is definitely a scary, to me, time. I mean, we lived through a pandemic, and I thought this was bad, but now we're potentially going to live through a another war, and I mean, this could get very, very bad, because this area, there's this Islamist movements, there is fanaticism, really, especially with Hamas, hell-bent on destroying Israel, really, with no clear way to resolve this conflict. I honestly don't know how to resolve this conflict. So this could be quite bad for everything, really, from lives lost to prices at the pump and everything in between. All right, so that's gold, oil, and finally let's wrap up with Bitcoin. Bitcoin also was influenced by the recent events in Israel. So here is October 7th, 8th right here. And then we had a rally. Now, Bitcoin, I don't know exactly why it rallied, but to me, it was already in an uptrend. Notice I actually have positions open in Bitcoin, and they are a nice plus already. So I bought around average 27,000. They are already 33,000. So this pattern. Why do I think Bitcoin is in an uptrend? Because it entered a new uptrend where I'm hovering in February of 2023. And the only reason that I think it is because it closed above my blue support resistance line. So that's all I really needed to know at that point. Before, it was in a downtrend and we were selling it short. Okay, it was down, not just downward facing arrows. We were selling it short until it finally bottomed and turned around and we started buying it. Okay, so at this point, I think Bitcoin is definitely in an uptrend. We can look at the weekly chart of Bitcoin, and there it is. So, this is oil. Sorry, there's Bitcoin. So there's the breakout, and I showed this chart last time. I wanted to show it again. So, sort of again like a cup and W kind of thing. So there's the W pattern from the highs in April of this year 2023 to the lows in June, to the highs in July, to again lows in September, and now a new breakout. So new breakout, not only we are closing at new highs, 52-week highs, we are making new 52-week highs. So depth of this pattern, again, 27% or so, 670 points. 670 points after the breakout translates to Bitcoin somewhere in the vicinity of 40,000. Okay, so hopefully you're long Bitcoin. Definitely my subscribers are long. I'm long Bitcoin. We'll see where it goes. Definitely Bitcoin is an option. Especially if all of a sudden we see some failures of currencies due to war, etc. If you have any comments, please comment. If you have any questions, please leave them in the response below the video. Head over to MasterChartsTrading.com, sign up one of the products. I have 2 products and 1 bundle, so trading indicators. This line's on the chart. Notice that's how we pretty much trade. We buy around the blue line and then we trail higher. Vice versa, if we want to sell short, we sell short around the red line if we're trading things like Bitcoin or Forex. I also send out daily alerts, so I have a newsletter out. I have to send out daily alerts and weekly members only videos. So this week we will cover quite a bit of various securities. You can see Euro, natural gas, S&P 500, various large cap stocks, as well as speculative and gold related stocks. And of course, the best deal is to get both trading indicators and newsletters as a deal. Again, thank you for watching. Don't forget to hit the like button, subscribe to this channel, share this video, and have another great trading week. Bye-bye.